Welcome to PreciousMetalsInvesting.com. I have the pleasure of having as my guest today David Morgan. David is one of the world's top experts in the precious metals and is known for his thorough and in-depth analysis of the precious metals and precious metals mining stocks. Welcome, David.
Thank you, Ted.
Okay, David, besides our common interest in precious metals, we also have an engineering background in common. I think our engineering backgrounds have trained us to look at the data as our guide. How do you feel your engineering background has influenced your outlook and analysis?
Well, the analysis is fairly easy because, as you know, Ted, when you look at an equation for the bending of a wing, for an example, you do an equation and you then verify it looking at all cases through integral calculus, not that anyone cares, but from 0 to infinity. So what that does is it causes us to think at the extremes. Well, what if there's nothing? What if it's everything? And everything in between those 2 points. So I think most people listening would understand that when you look at something from both ends and the more likely outcome, you've covered all cases. And this has really helped my economic thinking, because if you think of the worst case scenario as an example, or the best case scenario as an example, you're probably going to be somewhere between. But nonetheless, it causes you to think throughout the entire spectrum. And also, when you look at an extreme and determine what that means, it'll also help you to, prepare or whatever. For a real quick example in real life, let's look at a stock. Stock represents a company. We'll take a little one as this example. But when you have a mining stock and you buy it, there is a possibility that stock could go to zero. And that has happened, and it will happen again. It's happened in the markets many times. Now, the probability is pretty low, but still that possibility exists.
Yeah, I've been reading a fascinating book on how we, quote, entitled How We Decide, and we would like to believe that we're rational beings and we look at the data and come to a conclusion. And actually studies have shown, especially with a lot of financial analysts, that they come to the conclusion first and then select the facts that support their conclusion. So I appreciate the fact that you have at times not only recommended the precious metals, but basically said now's the time to hold off.
Exactly. I do both. I have an investor mentality. I mean, nothing really makes me happier than to buy a long-term growth situation that compounds their growth for year after year after year, and you can buy it early, hold it for 5, 10, 15, 20 years, and make money every year or almost every year. I mean, that's true investing. Those days are probably over, generally speaking, for the general equity market. I mean, you look at, in the past, General Motors, for a quick example, those days are long gone for General Motors. But the trading side, especially in the commodity sector, is really important to understand, because they are so volatile and so you're leveraged so much, the moves are exaggerated because of all the leverage. So in those cases, it really pays, if you're so inclined, to call tops and bottoms and move some of the capital in and out of those situations. It really helps on a psychological, emotional basis as well. I called the top at the $21 level, and there were others out there saying that's the ultimate top. It's never going higher. That's it. And I felt very strongly that was a temporary top. And then when we got down under 9, I certainly didn't lose my conviction, but I did question the overall trend, because I wanted to look, and I did, to see if the major uptrend had been pierced or not. Depending on how you draw the chart, it touched the major uptrend line and bounced off it and came back up. You could draw it differently, and you might have pierced it very slightly. Regardless, that's history now. We know that from that sell-off bottom in the 2008 financial crisis, that a lot of silver people were smart enough to buy at the bottom or very close to the bottom or during the bottom, and have reaped very great rewards. I mean, from the round number, $10, it moved up basically fivefold all the way to 48. Called that top again selling off, our trading position, keeping our core position. And again, it's psychologically satisfying to be able to do both. In other words, to hold your key or core position and yet take profits of, say, perhaps as much as 25% of your portfolio, keep that in the cash and redeploy it at a more appropriate time.
One of the things I greatly admire about your work in the precious metals is the depth and thoroughness of your analysis, coupled with a real down-to-earth grounding and modesty. How long have you been interested in silver, precious metals, and mining stocks?
A very long time. I mean, if you read my book, Get the Skinny on Silver Investing, I talk about being an 11-year-old kid and watching the silver coinage evaporate from the time I was born until around age 11. Silver, 90% silver coins are what we're circulating. And I've always been fascinated with money and investing. I don't know why, I just was. And so when the coins turned over into 1965 with the Cupo nickel coins, I noted that mentally. I thought, this is interesting. These cannot be equal. Never knowing at that point in time what I'd be doing for a living today. But really, I started in the stock market at 16. You have to be 18, but there's a provision called the Uniform Gift to Minors Act that your parents could sign and say, my son or daughter understands enough and I'm going to help them, or whatever it said. I don't know the exact contract. So I started investing in the Dow Jones when I was about 16 years old. So just something that really, really resonated with me. And, when did I really get into it? In my early 20s, I started devouring all kinds of books on investing, trading. But primarily, my main thrust was like economics and monetary history. And once I learned about the fiat money system and fractional reserve banking, that sort of lit a fire under me, and it actually continues till this present time.
I remember listening to one of the interviews where you did, and you identified the cell phone industry as a opportunity, and basically passed it on to your father, and he profited greatly. Although that's not precious metals, you're certainly fortunate that you were able to see the value of this so early.
Well, thank you. And, I changed the name of the report many, many years ago. It used to be called The Silver Investor, same as the website. And it was outside of silver, but it focuses on silver and still does. But there's a lot of investments outside of silver. Basically, I'm a capitalist at heart. And so, there could be a time, depending on how this unraveling continues, that there'll be a time to move out of precious metals. And I know a lot of metals heads, such as myself, may find that hard to believe, but all markets ebb and flow. So I changed it to the Morgan Report because we do look at things outside of the metals. I mean, one of our best companies was a resource company, which was a moly situation. I've looked at the rare earths. In fact, one of the few or first to look at the rare earths. We no longer do that very often. I do touch on it from time to time. But I'm always kind of scouting out, opportunities like that. And going back to the cell phone, when I did bring that idea to my father, he said, David, that's an opportunity of a lifetime. And obviously proved correct because I saw it as big, but not really to the scale that it is. I mean, just look at China, which is, one of the few growth areas for cell phones. I'm sure there are other areas as well. But, the North American market, I mean, I don't go anywhere in my travels these days, Ted, that everybody from about age 20 on up has got a cell phone with them.
Right. The subheading of the Morgan Report is money, mining, and metals. How do you address those areas, and how do you feel those areas relate?
Well, they all relate together, in my view. First of all, money is something that most people are very interested in, regardless. It transcends everything, in my view. It transcends religion, transcends sex, transcends age, transcends political orientation. It transcends everything because everyone's interested in money. The problem, the way I see it, is that most people don't understand what money is. They don't understand what it's supposed to be and what functions it serves. They just think of money as these green pieces of paper in the United States or different colors in different areas of the world, and that's money. But really, time is shown again and again and again that is an illusion that evaporates over time, and that's the situation we have now on a global basis. So you have to understand money. So my editorial almost every month deals with some aspect of the monetary problem and, what could be done about it. And then metals is, the best place to be in my view, and there are others. Energy is very important as well, water as well, food is, again. But my focus study and the amount of time I have available focus on the metals. So we look at just about everything, but we don't see the opportunities in, say, lead, zinc, or copper that we see in silver and gold, although there are opportunities. I've recommended a couple of copper companies along the way. A few of the silver companies that we have chosen to feature are, lead, zinc companies as well as silver companies. So, we look at everything on the metal side. And then mining, of course, we look from the top down. We look at top-tier, cash-rich, unhedged mining companies, mid-tier growth companies, and speculative companies.
You said in some of your interviews that owning the physical metal should be the base of your precious metals investing strategy before you invest in mining stocks or ETFs or anything else. Just considering the precious metals portion of your investment portfolio, what percentage of the investment should be in physical silver? What percent in mining stocks or something else?
Yeah, very well. This is a general statement. I'm
right
as they come, as you know, Ted. So basically, it's up to the individual to make that determination. But as a rough outline, when I wrote the 10 Rules of Silver Investing over a decade ago, in the last rule, I said too much of a good thing may be too much. 10% is probably enough for most individuals. And I changed that shortly thereafter, within a couple of years before the war started in the Gulf, in Iraq, and said, under the current economic conditions, I think you can move it up to 20%. So I'll use 20%. With the 20%, someone is probably between age 50 or higher. My thought on that would be a 50-50 split. 10% would be in hard money, which would be gold and silver. The other 10% would be in the mining shares. And again, that 10%, you'd probably want 80 to 90% in dividend-paying or high-growth situations. I mean, these are management companies that have strong management, politically and geophysically diversified, if possible, like a Pan American, for example, or a Hecla Mining as another example. These companies have mines, in different locations. So if something happens for Hecla, going back in time in Venezuela, which was heartbreaking, but didn't ruin the company. It wasn't that they only had one mine; it was one that they had, but it went south under the political regime. But they had several other mines that were producing. So that's where you want the most of your money. You want the best companies that you can afford, and then you want. What I teach is to speculate. I mean, everyone loves that cocktail story where they bought a stock for 27 cents and it went to $2.70, or better yet, went to $27. But that does happen, but it's very rare, and the odds are against you. So you do want to balance the portfolio with the risk and reward profile.
Mm-hmm. Are there any specific forms of the physical silver that you recommend investors start accumulating?
Well, going back to the 10 rules that I outlined, by the way, that's for free on the website. If you just come to silver-investor.com, you could sign up for the free e-letter that goes out weekly. When you first sign up, the autoresponder will give you the 10 rules. It does, I think, one rule about every 2 or 3 days. And what I said in that was that you should buy the most silver per dollar invested. So in that case, usually that means constitutional silver, which is, 1964 or older, 90% silver coins, dimes, quarters, halves, or silver rounds, which are privately minted 1-ounce silver coins that are, again, are not government issued. Those are your best bets for the most silver per dollar invested. But then there's people that think that, I'd rather have a government stamp on this ounce of silver rather than a private stamp on this ounce of silver. And again, I remark, if that's what you determine to be best for you, then by all means, invest in those.
There seems to be right now a large-scale manipulation that's been going on for a couple of years in the silver markets to push prices down. There's even some pending legal action. as you've remarked in some of your interviews, it seems to be getting harder and harder for short sellers to push the prices down. Do you see an end to this market manipulation? And would you like to speculate on when it would end and what we'll see in the metals market when it does end?
Well, if history is any guide, and I believe it is, then all these price controls, management of the price, manipulation, whatever term you want to use, do end. And I believe this one will as well. The comment that it's taking more and more effort on the shorts to drive the price down is a fact. If you go back a decade or so, the amount of paper silver that had to be sold to move the price down was maybe a factor of 2 or 3 relative to the physical side buying silver. Now it takes about 10 times as much on paper to move the price the same amount. So it proves to me that we're winning. In other words, those that are accumulating physical metal have more influence. For every dollar invested in physical metal, it has much more of a foundational take where that builds again on itself over and over. So in other words, the more physical silver is taken off the market, the stronger the position is, and the harder it is to throw fictional silver at the market, drive the price down. Although it's done and it does work, it's just harder. As far as when, that's a tough one. If you asked me that, well, I don't know, 13 years ago or so, I probably would have given you a different answer because at the time that we were in such a deficit situation for silver. There was no new mining going on. It looked like it was almost imminent. In fact, I wrote an article that I'm not embarrassed about. I mean, all my work is up there, good, bad, or indifferent. I certainly don't have a claim that I'm always right, but in that article it's called Silver to Zero. And basically from the data available at the time, it looked like, again, it was very close. Well, since I wrote that article, and I wrote a subsequent Silver to Zero Revisited that corrected a lot of my errors, and I certainly owned up to the fact that I made some bad assumptions in that first article. Nonetheless, looking from where we are now, where we've had extremely huge increase in mining production globally, primarily because of the boom in China over the last decade. So that changes the dynamics. When you have a lot more metal coming out of the ground, you're certainly going to change the structure of when you're going to have this price point or this tipping point. I would say probably 2 to 3 years out, maybe longer. It's tough to know, and here's the reason. One is we don't know the future. No one does. Secondly, there might be some innovation in the mining sector that no one's thought of or is maybe on the books now that we'll find out about soon. Also, there's the political side. In other words, there's so much favoritism to the shorts in the COMEX, in the futures markets, that the rule changes, if you want to call them that, can take place at that time. So that's a tough call, but again, going by history, I don't want people to be upset that they shouldn't buy silver or gold because, there's these contravailing forces. I mean, my basic tenet has been very consistent. I've always stated that you cannot manipulate the market's long-term trend, and that's true. I mean, silver was under 5 when I started my website. It's up to around the $30 level now, and in a 13, 14-year time frame, that's a pretty good return in real terms. And gold was at $250, and now we're at around the $1,600 level again, and again a good return over that time frame. Would they be higher without these massive paper sellings that take place from time to time? The answer is yes, they would be. But regardless, I do again think that's going to come to an end. I just don't know when.
I think although silver has come down recently, I think Europe's financial situation, the U.S. financial situation, and other fundamental factors seem to speak well for silver's potential. You've said that 90% of the profit comes in the last percent of the move. Where do you feel we are in that move right now, May of 2012, and what do you forecast for the rest of this year?
Great question. Actually, it was Jeff Christian from CPM Group that said 90% of the move comes in the last 10% of the time, and I've used that several times since then, and Jeff actually backed off on that. You can make that case for the last bull market in silver, and I did. In fact, I wrote that in the Morgan report recently. But that's a general idea. It's not precisely 90, and it's not precisely 10. But what I really want to convey is that the biggest up move is, you're an Elliott Wave person, and I'm not a big Elliott adherent, but the general idea of Elliott, I think, has some accuracy. This final phase of the market was the last, most enduring, longest lasting, and largest move by far. And we have yet to see that. And this is where silver just keeps going up again and again, day after day. And the corrections are very brief, perhaps sharp, but they don't last long. And that part of the market tends to gather a lot of momentum, a lot of new buying, and a lot of excitement. This is what we saw in the NASDAQ market at the top. And in other words, I remember the NASDAQ hit, I think it was 2,500 or something. And, it's way overpriced, and who would buy it now? And it quickly zoomed in like 6 months from there to well above that level. And this is true of the housing market. So most markets react the same way. They get this over-enthusiastic, what I call manic or mania phase that takes place. I'm almost certain that will happen in the metals. In fact, I believe that will happen to such a degree in the metals that it'll go in the history books. It'll go in the financial record books, because when the dollar starts dying and the dollar is repatriated from all of the other countries that hold dollars as a reserve asset, decide, oh my goodness, the United States is not backing off. They're just going to print to infinity and going to make the dollar worthless. I've got to cash these dollars in for something. I'll buy bubble gum. I'll buy flashlight batteries. I'll buy anything I can buy. I just don't want to have a dollar. And once that psychology takes place, you really can't turn it off. But once that happens, you'll see gold, silver stocks, anything related to the metals will take off in a wild way. And I'm sorry, you asked me when I thought that would be. I'm looking for the final phase, and to probably be between 2014 and 2016. Right now, 2012 in my book is a transition year. This is the year where Christmas for Americans in 2012 are probably going to have a Christmas and somewhere during the event, or maybe not. I'm kind of making this up, but I want to be clear on the idea. I'm not making up the idea. The idea is that, you know what, I don't care what these politicians are saying. I don't care what, Fed Chairman Bernanke does. I know that the good old days of the early 2000s aren't coming back. We're living in a reality. So that's what I call the transition year. So I think this year of 2012 is a year where most Americans, become adults and decide, you know what, I'm not paying much attention to the mainstream press. They're just shooting me stuff that really can't be relied on. I'm looking out my window. I'm driving around my town. I see what's going on, and it's not pretty. Things are not getting better. So that's that year. And then 2013, I think, is a rebuilding phase where you're going to see stronger markets in the metals and probably all the commodities. And then the blow-off phase, it takes time for that foundation to build. So I'm looking for like 2013 to 14. Higher prices all along. Dips, of course, they come and go. But then that final mania phase, it's really hard to tell, when that spark takes place. It's like watching a flock of birds that all flying, in the winter, and then all of a sudden they make a quick U-turn all in unison. No one knows why that happens or knows why or when it's going to take place, but it does. That's sort of the ignition point. But once it happens, people follow very rapidly, and again, you're going to see huge moves in these markets.
Mining stocks are one of your focuses and areas of expertise. In some of the interviews you've done in the past, you said mining stocks offer better leverage and profit potential than other metals investments. Where do you feel we are in the mining stock cycle, and what do you see for the future versus other precious metals investments?
Well, it's been extremely difficult for the people in the mining equities here for the last several months. And I do believe we're at a bottom, or very close to bottom, as during the interview. If you're new, it's a good way to gain leverage. You have to be a bit patient. It's not going to rebound immediately, but it probably will within the next 2 to 3 years quite significantly. And going back to what we were just talking about, the final phase of this market, most people will not buy physical metal. Gold will be, for an example, $2,500 the ounce or higher, and so will be $60, $65 or higher. And people will look back. I mean, they have the internet. They're going to say, geez, I could have bought silver at $5 several years back, or gold at under $300 several years back. I don't want to pay $2,500 for gold. But they will go into the market looking for the cheapest silver and gold stocks they could find. and they'll pour money into that. They may move their IRA into it. They may, do anything to get into this market. And so a lot of that money will come to the mining equities, and that will push the prices of the equities far higher. So it's easier to make a stock investment for most people than it is to make a precious metals investment. Although a physical metals investment is one of the easiest transactions you'll ever make, nonetheless, the final phase will be comprised mostly of people that will buy the mining equities.
I think one of the pillars that will maintain silver's value today is the industrial demand. It's required for many of the electronic devices we come to depend on, and it seems that there are new medical applications and new applications in the alternate energy field almost every day. Could you talk about the industrial role of silver and what part it plays in the value and investment potential?
Well, it's a good buffer for the foundational price of silver. I mean, it's pricing elastic for almost all industrial demands. It's price elastic for jewelry or silverware, but almost any other application, it's inelastic. So if you're building a flat screen TV that's selling for, I don't know what they are these days, and that's come down significantly, but anywhere from, say, $600 to $2,000, and you're using a tenth of an ounce of silver, and I don't think it uses that much, but if you're using if silver goes to 100 or 200 or 300 an ounce, it doesn't really matter for the end product. It's such an insignificant portion of the price relative to the amount used. And so it's pricing elastic. You couldn't substitute anything that would work as well. And that's true of almost all electrical applications. So the demand will continue. The demand of going back a little more than a decade was about 35% of the entire silver supply. Now it's 54%. And in that 10-year time frame, we've had significant increases in the amount of silver that's come out of the ground. So not only is it, moving up as far as percentages, over half the market's industrial demand, it's done that while the production rate of silver has increased substantially as well. So it's certainly, again, important. Now, the argument about, price too high and price being a mechanism that controls supply and demand, and it's true it does, especially if we have a real free market. So there might be a curtailment of silverware as an example. Silver jewelry is a bit of a different story. What's interesting about silver jewelry is that as gold goes higher with silver, or vice versa, however you want to think of it, a lot of gold jewelry buyers will switch to silver. So the detriment to silver's jewelry purchasing is actually not as significant as it is in the gold market.
You and others have estimated that there may be as much as 100 times as much paper silver and silver derivatives as actual physical silver. We've seen some pretty sophisticated investors lose investments when the silver they thought they had turned out to be paper. We've also seen some legal action where people were paying storage charges for paper silver and the physical metal really wasn't in the vault. What are your recommendations for reducing or eliminating counterparty risk in your precious metals investments?
Well, obviously, as Mike Maloney says, you can't touch it, you don't own it. So buy the physical silver and take delivery of it. And then if you want to redeploy it into a storage vault or something like that, that's fine. I realize that's not the case for everyone. And I've done actually several consultations with high-net investors that have asked me, that same question. David, I trust you, and I want to buy, X amount of silver. We're talking significant money here. But I'm not putting it in my office or my house. I mean, who do I buy it from and where do I store it? So I give answers to that on an individual basis because, one size doesn't fit all. It's not always someone that's U.S.-based and that's
right.
But you want to be careful. And going back to the 10 rules of silver investing, what I say in there is to start small. Make a small purchase. See how you're handled. See that you get it. See how much time it takes. And all those things that you're concerned with, especially if you're a first-time buyer. And once you make a small purchase, for a quick example, let's say you're going to put $5,000 or $10,000 into the precious metals. Start with $1,000 purchase and see what happens, or a $500 purchase, and find out what happens. And after that, then you'll be, you'll have confidence to go back in and purchase the rest, or purchase it over time, or whatever you choose to do. But some people get very excited about this market. they divert, a substantial amount relative to their net worth into the metals all at once. Sometimes they buy the wrong kind, they buy from the wrong people, and things do happen. I mean, this market is probably one of the safer ones out there. Nonetheless, there are, places you want to avoid, and investments in the precious metals you want to avoid.
That's great advice. You're very down to earth, and one of your strengths is being able to put precious metals investing into concrete terms. Everyone, even the beginning precious metals investor, can understand. Could you talk about a little bit of silver presentation?
Oh, the one about if everyone owns
myth.
Yeah, thank you. That one was in my head for probably a couple of years. But if you talk to most dealers, most precious metals dealers, a lot of them are fairly agnostic, because a lot of these guys have been around for a very long time, and they saw the first bull markets, such as myself, and they're a bit chided about it. They don't have the emotional attachment, let's say, to the precious metals and honest money that I have. And so their basic tenet is everyone should own a little. And so that sounds great, but they don't really understand what they just said, because, first of all, everyone, if you took everyone, meaning the population of the planet, not everyone could own a little. So I did this video that you can look up on my YouTube channel. If you go to YouTube and type in Silver Guru, you'll have to search around. I do a fair amount of videos, but I think it's titled Everyone Should Own a Little, or try that in the search engine. You'll probably find it. And what I point out is, even in the United States, if everyone owned a couple of ounces, you run out of the physical silver supply. And 2 ounces of silver is actually, in my book, a little bit of silver. It's certainly not what I consider an investment. My idea of an investment in silver would be $1,000 or more. So even at today's price, 2 silver ounces is about $60. I don't think $60 is an investment. $60 into 2 silver rounds is not going to change your life significantly. But $1,000 might, or certainly could help you through hard times or whatever, appreciate enough to where that 1,000 could become 3 to 5 to 10. Who knows where silver's going? I think it's going far higher. But that's the idea. So if everyone owns a little, it's a preposterous statement. Not everyone can. And that's the beauty of the silver market, is it is a very small market. The downside is small markets can be manipulated quite easily, whereas larger markets is much more difficult to do so. But again, if you start your portfolio correctly with physical silver, physical gold, and then move into other areas if you so choose, then I think you have a good balance.
You've often said that what people need to do is educate themselves. I would like to urge all my viewers to go to your site and seriously consider joining your membership at the level they feel is most appropriate for them. I'm a member at the Basic Plus level, and there's just a wealth of information there: stock company updates, archives, the Morgan Report, asset allocation table, and in addition to the Morgan Report, you'll have access to bonus reports that alone are worth more than the price of admission. Dave, to make it easier for the audience to find you, I'll put links to your site and the other services you offer on your resource page at preciousmetalsinvesting.com. But David, would you talk about the services you offer and where people can find you?
Sure. I'll do all the free stuff first. Twitter account is SilverGuru22 on Twitter, and that basically, I don't tell you if I'm having a latte or something ridiculous like that. What I do is I usually link 3-4 articles a day that I think is very important in the precious metals or the economic picture that I've read that I think you should pay attention to. I have a video channel on YouTube. It's called Silver Guru. Those speak for themselves. Some are a little bit for fun, but most of them are pretty serious in nature. And then the website is themorganreport.com. If you go to themorganreport.com, all one word, you'll find a free e-letter that comes out again weekly. You'll get the 10 Rules of Silver Investing if you're brand new. And then there's 3 levels of membership services. There's the basic level, which is basically a buy and hold investor. There's the look over my shoulder basic plus service that I show you charting, lots of videos that we do at the gold shows, the company updates, that type of thing we do on video, and also this ability to look over my shoulder when I see a move coming or I want to trade a position. I'll tell you what I'm doing. And then last, we have an advanced service, mostly for fund managers or very high net worth individuals, where it's kind of a potpourri of different things that I think up every month to bring people in. Sometimes we have like an Eric Sprott interview or a certain situation that's probably not appropriate for the basic membership, stuff like that.
David, are there any questions that you wanted to answer that I haven't asked you?
No, I think I'll just make a general comment that, investing is great. It's fun. Again, we talked about money transcending everything. It is important. But I think not to make money the most important thing in your life. I mean, I strive for a balanced life. I'm still probably a little more obsessed about, money mining and metals as my work entails because I'm very passionate about it. But I also, take time out for, all the joys that life has to offer. Certainly, I think we're facing hard times. They're going to get harder. But I think, that puts a greater demand on all of us to become, better human beings all the way around and to count, things that are good in our lives and to, look for the good, look for the good in others, look for the good in your life and, focus on, I think, the positive. I think there's too much in our industry, and I'm probably as guilty of it as anybody, of kind of constantly, beating the drum on the doom side of the equation. But, every silver cloud, every cloud has a silver lining. So, there's that balance in nature of good, bad, the black, white, the up, down. I mean, everything has a balance. So I think a balanced approach to investing, a balanced approach to life is the final comment I'd like to make.
Well, thank you very much for being with us today at preciousmetalsinvesting.com. Once again, I'd like to urge my viewers here to visit David's resource page here or go directly to his site. Thank you so much for taking the time out to talk with me today.
My pleasure. Thank you.